Good morning. We want to welcome you all to our webinar workshop this Wednesday morning. We appreciate you waking up and spending a small part of your day with us. My name is Brian Griffin, a marketing assistant here at Messer Financial Group. Many of you are familiar with Messer Financial, but in case you don't know who we are an FMO located here in Mint Hill, North Carolina. We started with just 2 agents. We're now serving over 20,000 plus agents across 40 states, and thank goodness we are still growing. So with everything that is going on, there is a new surge in the final expense sector. Clients want to be sure their families are going to be taken care of if something happens to them. They don't want to be a financial burden, and they want to make sure that they leave a legacy. So as agents, we want to be sure that we feel that need and help them honor that wish, but also we want to be sure that we're placing our clients with a reliable carrier that will treat our clients like we treat them. NGL has over 100 years experience honoring these wishes and taking care of the clients the way that we want them to. Bob Basulik is a retired NGL executive with more than 30 years experience in customer service, sales, marketing, product development, and pre-need and final expense. And he's an agent recruiter and trainer, and he's here today to introduce us to NGL's AssetGuard. So before we do get started, a few housekeeping rules. We're going to be holding questions until the end of the presentation. If you do have questions, just type in the box on the right-hand side of your screen, and we'll get to as many as we can at the conclusion of the presentation. So now, without any further delay, Mr. Bob Basulik.
Thanks, Brian, and thanks everyone for joining us this morning. Hope everyone's staying safe and well amidst this pandemic that we're all going through. This is kind of unprecedented and something I've never seen before in my life and hope I never see again. But at any rate, I appreciate Brian's introduction, and I do concur with him that there is a big opportunity in the final expense space right now. And I think that the AssetGuard product from NGL is a great product to help you take advantage of that opportunity. What we're going to, there we go. Sorry about that. What we're going to talk about today is going to start a little bit with the product. I'm going to give you some product details, give you a chance to know what the product looks like as we go through the rest of this presentation, and maybe help you imagine how it might work for your clients. I'm going to go from that then to talk a little bit about who buys AssetGuard today and why they are making that purchase. Talk about some of the benefits for your clients, and maybe most importantly, talk a little bit about how offering AssetGuard can benefit you as an agent. We've got a couple ideas of ways to grow your client base, and then I'm going to finish up by talking a little bit more about NGL and who they are and why they're a strong carrier to put your business with. Excuse me, I apologize for the throat clearing today. It's allergy season here in North Carolina, and I'm a victim of that. It's not COVID-19, so I don't think I'm contagious. Y'all ought to be safe. Essentially, what AssetGuard is a whole life insurance product designed for the senior market. It's really defined by its simplicity and its accessibility. Anyone through age 99 can qualify for a policy. They don't have to go through any blood tests or medical exams or provide medical records to get a policy. There are multiple ways to pay, single payment plans and payment plans for up to 10 years. The issue amounts with NGL start at $2,500 minimum policy size and go up to a maximum of $100,000 for single pay policies or $35,000 for time pay. All policies have an increasing death benefits, and we'll talk a little bit more about how that works later. Given that everyone qualifies, there are some benefits for healthy clients. Policies are either standard or guaranteed issue. The standard issue policies have lower premiums, the immediate full death benefit for all payment plans, but they are contestable for the first 2 years after policy issue. Everyone can qualify for this, and if they don't qualify for a standard issue product, they can get a guaranteed issue product. With the guaranteed issue product, single pay plans have an immediate full death benefit, just like with the standard issue. The plans with time payment that are set up for time payments have limited death benefit during the first 2 policy years, and these policies at the same time are not contestable. So the death benefit will be paid without any underwriting and claim time. How do you determine the type of coverage? Well, NGL's got a very simple one-page application, essentially, and it's got a statement of health on the application. Now, back when I was with NGL, we used to talk about our one health question to answer, and actually there's one answer to a multiple part health question, so I'm not going to try and befuddle you with the idea that it's a single health question. It is multi-part, so essentially it starts out by wanting to know if your client's on oxygen, if they're hospitalized, if they're in some other medical facility and receiving care. It asks if during the past 2 years, if your client's been advised by a medical professional to have any surgical procedures not been performed. And then it's got a whole list of ailments that if your client's receiving treatment for those, then they need to answer yes on the health question or in the health statement. If the response is no to any of those parts of that question, then a standard policy is issued. If the response is yes, or if the question is not answered, then your client gets a guaranteed issue policy. So at any rate, your client can qualify and can get a policy. NGL has included a number of payment options with this product. Payment plans are available to spread the cost over up to 10 years. With a single pay policy, anyone aged 0 to 99 can qualify and pay in a single payment. If they want to pay over 3 years, they have to be 90 or younger, 5 years, 85 or younger, 7 years, and 10 years, 80 or younger. So there are some limitations on who can get a time pay plan. And with the time pay plans, there's the opportunity to pay over monthly payments, quarterly payments, semi-annually, and annually. The payment methods available are direct bill, EFT, credit card. The credit cards that are available are Visa or MasterCard. And one thing to note is that payment via credit card may result in a commission reduction. We'll talk a little bit more about commissions later in the presentation. Another thing to note is that the majority of the policies that are issued by NGL with the AssetGuard product are single premium. During the first 2 policy years, death benefits amounts vary between standard and guaranteed issue policies. With the single pay and standard issue 3, 5, 7, and 10-year pay plans, all of those have an immediate full death benefit. If a non-single pay guaranteed issue policy is issued, there's a limited death benefit. During year 1, it's limited to a return of premium plus 3%. So if your client's paid in $1,000 and they pass away during year 1, the death benefit would be $1,030. If they die in year 2, then the death benefit is limited to 70% of face. So on a $5,000 policy, the death benefit would be $3,500. After year 2, the death benefit is 100%. Let's talk now a little bit about why clients buy AssetGuard. AssetGuard was originally developed as a final expense product to pay for funeral, burial, and other final expenses. And the main reason why we found that people buy this product to pay for these types of expenses is for the peace of mind of knowing that the funds are there, they're set aside, that one of the things that the family won't have to do at the time of death is to scramble around to figure out how to pay for the funeral and other expenses. This is very important because generally funeral directors want their payment prior to the funeral service being delivered. And with AssetGuard, you can make that work because AssetGuard, NGL pays claims on AssetGuard policies very quickly, and generally the claim payment is available prior to the funeral service being delivered. Another growing opportunity with AssetGuard is a tool to transfer wealth to family members and/or to charities. A 2014 LIMRA study indicated that 7 in 10 affluent retirees value the ability to leave an inheritance. And and I personally think that probably most everyone would like to have the opportunity to pass on part of their legacy, their wealth to family members or to charities when they pass away. So I think this is a great opportunity. A third reason why clients buy AssetGuard is because they might not otherwise qualify to purchase other types of life insurance. Excuse me. So who buys AssetGuard? Excuse me. Most AssetGuard policies are purchased by folks who are already retired or during retirement. In 2019, NGL issued AssetGuard policies with an average age of 68.5 years. So this kind of puts the product square in the crosshairs of the boomer market. And I'm sure you're tired of hearing about everybody talking about the boomer market, but it is a big opportunity. The boomers are those Americans born between 1945 and 1965, who today are now between the ages of 55 and 75. Statistics show, looked on the census website, and there are over 72 million baby boomers in this country today. So it's a huge market, it's a big opportunity. We talked a little bit about the asset transfer thing, and one of the things of the boomers, one of the attributes of the boomer segment is that they value being able to pass on assets to charities. Studies show that almost $62 billion annually is contributed to charities by boomers. The other place that we're seeing purchases of policies is with people with special needs. Some folks have been very successful in working with special needs communities in offering products to their clients through special need trusts or otherwise. So this is a good opportunity. What are some of the benefits of AssetGuard for funeral and final expenses? Again, as we talked earlier, AssetGuard is designed specifically to allow individuals a way to set aside assets specifically to pay for funeral, burial, and other final expenses. One of the important things to note is that typically the funds to pay for AssetGuard are essentially moved from one pocket to another. Clients typically take funds from savings accounts, CDs, other similar types of investments, or even from existing life insurance policies, and use those funds then to purchase an AssetGuard policy so that they can achieve the goal of setting aside funds specifically. The main competitor for this product in this space is pre-need funeral insurance. With AssetGuard, the clients don't have to go to the funeral home and pick up funeral services and merchandise, and they don't have to tie their policy to a pre-need funeral contract. This gives them more portability, more options at death to pick funeral goods and services not tied to a specific pre-need funeral contract. Excuse me. One of the most important things I think I mentioned earlier is that the death benefits are available quickly, usually within 2 business days after a claim is filed with NGL. They're not subject to probate, so they can be paid quickly to either directly to the funeral home or funeral provider, or to the named beneficiary, who can then take care of the funeral and other final expenses. What are some of the benefits for using AssetGuard for asset transfer? Remember, we talked about this being a growing opportunity. Well, with AssetGuard, the policy owner can name beneficiaries who can be individuals or charities. The death benefits transfer outside of probate, free of federal income tax to those beneficiaries. The funds to purchase, again, come from a variety of sources, and it's usually not new money, it's money in existing places. Same type of thing as with the funeral expense trust. One of the things we're seeing is that folks that are retired and are subject to required minimum distributions from IRAs are using that cash flow stream to pay for or to purchase an AssetGuard policy. And most of those seem to be purchasing for asset transfer. But excuse me, I'm sorry. So I've got a little example here to talk about how that might work. One thing that makes this important and a huge opportunity is I looked on Statista yesterday, a website on the web, where we find all our information these days. And in 2018, they showed that there was $8.8 trillion in IRAs in the United States. So there's a huge opportunity to tap this resource to offer AssetGuard policies. So let's walk through just a quick little example. I don't have any slides on this, so I'll just talk through what I came up with. My example is set up prior to the Secure Act, so it uses the ages and information that was in place prior to the Secure Act. But other than some age changes and such, I think the results ought to be very similar. I've got online again, and I use a RMD calculator that's available from Charles Schwab. And in this example, I've got my my guy Tom, and he's got $100,000 in a traditional IRA. He's getting about 6% annually on growth on his investments in the IRA. He's going to turn 70 and a half, and he wanted to know what he's going to have to start taking out as required minimum distributions. So according to the Schwab calculator, in year one, his annual RMD would be $30,650. So that would come out of his IRA paid to him as income in year one. According to the same calculator, by year 10, the RMD amount will grow to $6,000. So Tom and his wife were looking at this. They really are pretty set with where they are income-wise. They don't need a lot of additional income, so they were looking for ways that maybe they can set this money aside to earmark it to be transferred to their beneficiaries, to their heirs. So if Tom wanted to purchase a 10-pay AssetGuard policy worth $10,000 at age 70 and a half, his annual premium would be $1,380. So that leaves him quite a bit left out of the $3,650 of annual income that he could use for other reasons. So what they thought about doing as well is purchase a policy for Tom's wife, who is also about the same age, and her policy or her premium would be the same, about $1,380. So in the first year, the combined premium is, well, actually, for all 10 years, the combined premium would be $2,760. I can read my writing right, which in year one leaves about $890 from the distribution. By year 10, there's quite a bit in addition left over from that distribution, additional income, which they may need later in life as their situation changes. So it's a good opportunity. It's a good opportunity to use these funds to purchase AssetGuard policies to help these folks set up a way to transfer funds outside of free income tax to their heirs. I just wanted to illustrate this because this is really kind of where NGL is seeing a growth in sales of AssetGuard policies is for persons who are looking to transfer funds versus to set funds aside for funeral and other final expenses. So let's move on a little bit now and talk a little bit about, in the title of my presentation, I titled it as Final Expense Insurance Plus. Well, here's what we think is the plus. NGL offers the benefit of two irrevocable trusts. One's an irrevocable funeral expense trust, and the other's an irrevocable estate planning trust. Both of these trusts are available at no cost from NGL. If your client went to an attorney and asked them to draw up a trust for them to accomplish the same purpose, it would not be at no cost. I don't have any idea what the cost would be, but they would be significant in working with an attorney, I'm sure. So why is this an important consideration? Research has shown that about 70% of individuals who reach the age of 65 in this country will need some level of long-term care during the remainder of their lifetimes. And long-term care is expensive. A private room, semi-private room in a nursing home is over $7,000 a month. That's $84,000 a year. Tom's IRA would be about gone if he had to spend $84,000 a year for long-term care. More than half of individuals receiving long-term care services and support have some portion of that cost paid for by Medicaid. I'm sure all of you know what Medicaid is. It's a government program that has very stringent asset and income limitations for qualifying individuals and their spouses. So basically, you've got to spend almost everything you have in order to get any kind of a payment from Medicaid. And there are also income limitations. If you make over a certain amount, you can't really get Medicaid benefits. So how does this work with NGL's Final Expense Trust? With NGL, your clients can buy a policy and immediately assign it to the NGL's Irrevocable Final Expense Trust, or I'm sorry, Funeral Expense Trust, or they may do so at some later date. And this is important because once the policy is assigned to the trust, it's immediately excluded from Medicaid countable assets. So say your client's not really contemplating Medicaid today, but they want to buy a policy in the eventuality that they may need to qualify at some point in time. So when that eventuality happens to occur, then at that point, the policy ownership can be assigned to the funeral expense trust, and that policy is immediately excluded from their asset base. With Medicaid, there's a limit on how much these policies can be worth, how much can be set aside to pay for a funeral. And it kind of varies by state. NGL has set a maximum of $15,000. If there's information on the different state requirements, different state limits, that's available on NGL's agent portal. And we'll talk a little bit about that later in the presentation, as well as to what all's available to you as an agent on NGL's agent portal. With the funeral expense trust, the death benefits are paid directly to the providers of funeral and burial merchandise and services. If there's any excess over what the costs of those merchandise and services are, that excess is payable to the estate and is subject to your state's estate recovery provisions. Just to give you some feel for how much of this was, how many AssetGuard policies were used with the funeral expense trust. In 2019, 78% of them, all AssetGuard policies issued were issued with FET. The average face amount of those policies was $53.17. And yeah, the reason that is not up to $15,000 is because not everybody has $15,000 to set aside. The other thing is that a lot of times folks will get an estimate of what it's going to cost for their funeral services and merchandise that they would like to have, and try and tailor the policy, the amount of the policy to match that need. So now let's talk a little bit about NGL's estate planning trust. And this is a little bit different. This is also used with the NGL AssetGuard policy. As with the funeral expense trust, the ownership can be assigned at the time the policy is purchased and issued, or at some later date. But there's a big difference in how Medicaid treats these policies. With these policies that aren't set up to pay for a funeral, Medicaid views the assignment of policy ownership to the irrevocable trust as a completed gift. With the completed gift in Medicaid, after 5 years, the value of the gift is no longer viewed as a countable asset by Medicaid. So there's a 5-year look back, essentially. So again, if you've got a client who's healthy and not really thinking they're going to need any type of long-term care services, or they may not qualify for Medicaid, they probably don't want to assign it to the estate planning trust immediately. But should things change and should their situation change, the trust is available. The ownership can be assigned at any point in time to the trust. But again, that starts the clock on Medicaid's 5-year look back period. So those are countable assets until after 5 years. With the estate planning trust, policies are limited only by NGL's maximums of $100,000 for single pay and $35,000 for time pay policies. Again, the death benefits are paid outside of probate directly to the beneficiary. Beneficiary is named in the trust. In 2019, 11% of AssetGuard policies were issued with the estate planning trust. The average face of these was over $22,000. So this is an opportunity to sell a bigger policy. And again, we believe it's a growing opportunity. So in 2019, that leaves 11% of AssetGuard policies were purchased without any trust, so that the client had the option to assign it to trust at a later date. One important note about irrevocable trust is once the policy ownership has been assigned to either the FET or the EPT, estate planning trust or funeral expense trust, the policy owner gives up all rights at that point in time to cancel or modify the policy in any way. The trust becomes the owner and the beneficiary of the policy. The distribution of benefits at death are spelled out in the trust document. So you name your beneficiaries in the trust document, or you name the funeral home. You name the institution that delivers the funeral goods and services to receive the benefits. You don't have to name a specific funeral home, but essentially it's set up so that the funeral home is paid once they provide a copy of proof of provision of the funeral services. So, we talked a little bit about the increasing death benefit early on, and I held off to talk about how that works until after we talked about the trust, because essentially what happens is NGL assigns the growth rate based on which trust is used at the time the policy is issued. So if you send in an application with the NGL's funeral expense trust, regardless of which pay plan is selected, the growth rate on that policy will be 0.5%, so 0.5% interest annually. With the estate planning trust, the single pay policy is 1% annual growth. The 3, 5, 10 pay policies are 0.5% annual growth. If you send it in with no trust, then the growth is the same as if you had sent it in with the estate planning trust. So 1% and 0.5% on the time, 1% is single pay, 0.5% on the time pay. All the growths are simple interest, but the interest is calculated daily, so they don't have to survive for a full year to get any interest. The interest is prorated over the portion of the year that the individual survived prior to death in that year. So, these rates seem kind of low. So I thought, well, let's kind of look at a comparison. We talked about where the money would come from, CDs or savings accounts. So again, I went out to the trusty internet back on tax day. Well, what used to be tax day prior to the pandemic. And I looked up what the national averages were. So according to the FDIC, the national average savings account interest on the 15th was 0.6%. So that's 0.6% across all accounts with deposits under $100,000. If you had more than $100,000, you could probably get a higher rate, but this was the average for deposits under $100,000. Then I looked on bank rate to look at the most recent national survey of banks and thrifts to find out what CD rates were. The average rate for 1 year is 0.46%. The average rate for a 5-year is 0.7%. And again, that was as of April 15th. So, if you look at just how things compare, maybe the simple interest rate on the AssetGuard policy is pretty good. So let's look at a little scenario. I went and talked to Joe. He's a healthy 68-year-old, and he decided he wanted to set aside $5,000 to have it available to pay funeral expenses or to leave to his children. So with scenario 1, Joe took his $5,000 and bought a 5-year CD since the CD rates were better than the savings account rates right now. And at the end of 5 years, with Joe's $5,000 would have grown to about $5,178. And each year, or at each time the interest was provided, Joe would have received a 1099 INT statement from his bank or financial institution on the interest he earned. If Joe had died during the 5-year period, the value of the CD would be included in his estate and subject to probate. In scenario 2, Joe takes that $5,000 and buys an AssetGuard policy. He doesn't assign it to trust because he doesn't think he's going to need Medicaid, and he's pretty comfortable right now that he could assign it later if he needs to. Those $5,000 would purchase an AssetGuard policy with an initial face of $5,045. So not a big bump, but he gets a little bit of insurance for his $5,000. Using the 1% simple growth rate, the total death benefit for Joe's policy after 5 years would be $52.98. He wouldn't have received any 1099 INTs, and should he die during the 5 years, his death benefit is paid directly to his beneficiaries. Or should he die at any time, his death benefit is paid directly to his beneficiaries that are named in the policy. So, so essentially, Joe does a little better with the AssetGuard policy, but I guess on the downside, if you want to look at downsides, is Joe has to die to get the money. He could cancel the policy. It's got all the non-forfeiture provisions. It's not in trust, so there would be available loan values or cash values with the policy. Just as a little note, Joe decided to put his policy in the funeral expense trust. The funeral expense trust has a lower growth rate, so it's got a higher death benefit. The $5,000, about $5,092 of death benefit face amount originally. And with the 0.5% growth after 5 years, the death benefit would have been $5,219. So, they're real comparable with the rates on comparable financial products that are available in the market today. So let's talk now about what some of the benefits are for you. Now, there are a lot of benefits, in ways that you can increase your market space. But one of the things that agents tend to look at is, okay, well, what are the commissions? What's it pay? How's it paying? So with this, I've got a lot of stuff on here, but essentially what it comes down to is with single pay policies, any policy less than $60,000 on single pay, the commissions are all paid at issue. Any policy with greater than $60,000 of face and at issue are paid over 2 years. So the commissions are spread over 2 years. Most of our policies, most of NGL's policies that are sold are well under $60,000, as you could tell from the examples that I gave earlier. On multi-pay policies, the commissions are paid as a percent of annualized premium over the life of the policy. So every year, as long as the premiums are paid, you would get a renewal commission. Now, we talked about the possible reduction for use of credit card for payment. I'm sorry, I've got premiums on there. Commissions are reduced by 2% for single pay policies paid by credit card. So in single pay policies, and NGL also has an opportunity where you can pay a partial down payment and then put the rest of the payments on time pay. So any time there's a single pay or a down payment, the commissions are reduced by 2%. So if you were getting normally you would expect a 10% commission, your commission would be reduced to 8%. Should your client pay by credit card. Let's look at an example. We'll bring back Joe here, our 68-year-old who's going to buy that $5,000 single premium AssetGuard policy. Let's look at what your commissions might be. Now, a caveat here, these rates are hypothetical. When you decide to go with NGL and do your contracting through Messer, you will be given your actual commission schedules at that point in time. So, again, these are hypothetical to give you an idea of what it looks like and how it's paid. With scenario one, Joe buys the policy, does not assign it to trust. The premium pays $5,000. If your commission rate's 8%, your commission will be $400 paid when the policy is issued. So you get the policy issued and you get a commission check or an electronic funds transfer of $400 at that point in time. So if in scenario two, Joe chooses to use the funeral expense trust, the FET. Premiums also $5,000, but again, the commission rates are slightly higher with this since the growth rate is lower in the policy. So let's assume again for this for illustration purposes that your commission is 1.25 points higher. So it's 9.25%. So when the policy assigned to the FET is issued, your commission will be $462.50. So that's at issue. So again, give you some idea that how you can add to your income stream, your cash flow stream on commissions using the AssetGuard policy. Now, there's a flip side to this coin. Since NGL is paying the commissions up front, they do reserve the opportunity to scratch some back in certain situations. If your client dies during the first 2 policy years on of an accidental death, there's no chargebacks. There's no chargeback anytime for accidental deaths. For non-accidental deaths, chargebacks are 100% during the first policy year on guaranteed issue policies and 100% for the first 6 months on standard issue policies. After 6 months with the standard issue policy, the chargeback percentage grades down through month 12, and then after month 12, there is no chargeback on any of the commissions on these policies. For policies that lapse or surrendered or go to their non-forfeiture option the first policy year, chargebacks are 100%. With standard issue policies, are contestable for the first 2 years. So NGL doesn't do much in the way of underwriting at time of issue, but on standard issue policies, they will take a look at the cause of death and look at what was stated on the application. And if it's found that there was a misstatement on the application, the policy is rescinded, and with any rescinded death claim, there's 100% chargeback. So you need to show some level of caution in how how your client answers that health question or health statement on the application. Anytime a policy is canceled, anytime a policy is canceled as a not taken, that will always result in 100% chargeback. There's typically a 30-day free look. I think NGL has expanded that to 60 days with the pandemic to allow persons to cancel their policies within the first 60 days. Sometimes NGL will extend that free look period and that results in a not taken. If that happens, it's done in agreement with the agent, then there is 100% chargeback. Also, commissions will be adjusted anytime the payment plan is changed after issue. NGL offers the opportunity for folks to do an early payoff if they're on a time pay program and want to switch that to a single premium. If that happens, then the commissions are adjusted to the single premium rates versus what was the multi-premium rate. One thing to help you out on this, and it's something that I recommend, is NGL offers the option to set up reserve accounts to offset possible chargebacks. So you can choose to have a percentage of your commission put in this reserve account up to a certain amount in the reserve account. There are a lot of options with it, but it's a good way to go because it is, you can't always judge these people correctly and what their health situation is. And it's a good way to kind of protect you so that if there is a chargeback, it comes out of your reserve account versus impacting your commission check for that period. Okay, some more benefits for you as an agent. We talked about NGL's agent portal. It's a nice site. I'm going to look at that in a little more detail here in the next slide. NGL's got a dedicated agent support team. They've got a direct email address and a toll-free phone line. So if you need any support, training, assistance, they'll help you with that. They've got a lot of their forms are in fillable PDF format online. The applications are available that you can just pull them down online, fill them in on your laptop, on your computer, and just have the client sign them. NGL offers a wealth of marketing materials and training support. Some of these, the marketing materials are almost all available for you to acquire online. A lot of them are free. Some of them have some minimal cost to them. There's training support available online. You can go on and do, they have brain sharks and a number of electronic options for doing training. As far as training support, that's one of the things that I'm happy to help you all with. So I can give you my contact information and I can help you with training and questions on completing the applications. NGL offers the ability to fax in or to upload completed applications electronically. That's available through their agent portal. And one of the nice things, if you find this to be a successful product for you, you can possibly qualify for NGL's annual producer circle reward trips. These are based on production, and if you hit a certain level of production, you qualify. The more your production goes up beyond that level, the more perks you get as a benefit of qualification. In 2020, this year, the trip was just completed recently. It was to Cabo. They got that in just prior to the pandemic breakout, so that was a good thing. I think everybody had a good time. I mentioned the web portal, the agent portal. Let's take a look at what that looks like. I know this is kind of busy, but this is a screenshot of what the login screen or the homepage looks like in NGL's agent portal. So you can see that you can get policy information. There's a website there's correspondence that's sent electronically. You'll get a note that you have correspondence, and you can go in and look at that online. There's policy service information, reporting. There's production reporting. There's commission reporting. Everything's available for you right here online. If you want to order supplies, there's a supply link to order your supplies online. Again, many of them are free of charge, or most of them are free of charge, but there are some marketing materials that you can purchase. There's information on the products that are available. I'm sorry, the allergy's acting up again. Marketing and training, announcement, frequently asked questions. These are pretty good sites. If you have a question, you can pop on there and probably get your answer without even calling anybody. There are some quick links available, the report link to get to the reporting, order print form. So these are kind of redundant here. There's a premium calculator on here if you want to go online and find out what the premium is for Tom or Joe or whoever's buying the policy. You can calculate them right online. You can download that rate calculator to your mobile device. You get a quick link here if you want to view policy details by policy number. You type in the policy number, hit go, and you can get the information on that policy. I talked about the information on state limits on how much can be put in a funeral expense trust in various states. There's a link to Medicaid information here. It's got a lot of information about that. Commission statements, submit new business. This is where you go to actually upload your client's application right online. They need to they need an EFT payment to go with that. Signature guidelines, that's something that's kind of in the frequently asked question is who needs to sign, how can they sign, what happens if there's a power of attorney, all of those good things. And then AML, if you need the AML course, there's a training course that's available online. So it's a nice website. It's pretty easy to navigate. Yeah, I like it. I use it probably about daily. A lot of times to get answers to questions because, you know, as the longer I've been away from going to work every day, the farther those get from my brain. So I need a reminder, and that works pretty well for that. So that's NGL's agent portal. It's a great site and something that I recommend if you sign up with NGL, you get into and get used to quickly because it'll be a great resource for you. One of the things I also wanted to touch on is with AssetGuard, it offers a real good way to grow your client base. Not all of your current clients are going to have any interest in this, but there are, again, the baby boomers are over 70 million strong. There are a ton of them out there that don't know what's available and need this help. And what we found is that AssetGuard's agents that are currently with us have had some great success by partnering with estate planners and elder law attorneys in their communities. What we found is that the planners and the attorneys are constantly looking for ways to create financial plans and strategies for their clients, and are often looking for product ideas to better meet those client needs. If you're interested in pursuing this, a great way to find an elder law attorney in your neighborhood is through the National Academy of Elder Law Attorneys, NALA. They've got a website and allow you to click on a link to find an attorney in your area by clicking on Find a Lawyer. In North Carolina, we've got a pretty good relationship with NALA and with elder law attorneys that are part of NALA. They're a great resource for us. They provide a lot of opportunities, a lot of referrals. You know, I kind of see working with an elder law attorney as almost a doctor-pharmacist relationship. The elder law attorney is the doctor, and they prescribe certain product ideas for their clients. And then you, as the insurance agent, become the pharmacist. You kind of fill the prescription for the products that they're looking for. That's worked very well for a lot of our successful our successful AssetGuard agents. Okay, that pretty much takes care of all the product stuff. Now I'll talk a little bit about who is NGL. Brian mentioned some of this in the intro, but NGL was founded in 1909. They're a mutual life insurance company headquartered in Madison, Wisconsin. So they've been around for over 100 years, been very successful, have a great building overlooking Lake Mendota in Madison, Wisconsin. And it was a great place to work, good people, and I think they're a really strong future. In 2000, I looked at their 2009 annual report. They had total assets in excess of 4.7 billion. So they're a big company that a lot of people have never heard of. 2019 net income was 44.5 million. They have been rated A- excellent by AM Best, and this year's rating gave them a positive outlook. They've gone through a big change in personnel and leadership at NGL over the past year, and I think they're doing some good things. One of the best ways to find out more about them is to visit their website. It's www.nglic.com, and there's a lot of information out there. So that pretty much concludes everything I had to talk about. I hope that I was able to at least pique your interest a little bit and make you think about maybe you might want to offer NGL's AssetGuard product for your clients. I think there's a great opportunity in that space right now, and there are multiple ways to use it. I'd be happy to work with you to think of some of those ways and help you get going. If you'd like to contact me with questions, you can contact me directly at my, probably the best way is my email address. I can get back to you then by email, or I can call you back. whatever works best for you. So that's pretty much it. Brian, I'm going to hand it back to you.
Very good. All right, Bob, thank you so much. A lot of great information that you just shared with us. And I know as far as the trusts are concerned, for a lot of us, that's something that's new to even consider as far as our portfolio. So I appreciate you going through that information. We do have a lot of different questions here for you. So if you can bear with us for a few more minutes and maybe help some of these folks out with their questions. Is that good?
Yeah, I'll do my best.
All right, excellent. So the first question, it says kidney disease not on dialysis. And I think that this is in reference to when you were going over the questions on the application, such as stage 3 or 4. So if there's something that's not on that particular application or those application questions, something like this, what would be the outcome?
The guidance that we've had in the past is if it's not specifically listed on the application, you don't have to answer yes to the statement of health.
Okay, so just assume that it would be a standard as long as they answer no to everything else.
Right.
Okay, excellent. The next question is, how popular is the 10-pay option?
I had gotten some stats from NGL, and again, the majority of the policies are single pay. The 10 pay is not a real popular option. I would guess probably less than 5% of new policies issued are issued under the 10 pay option.
Wow. Okay.
Now, again, as a caveat to that, that could change. And the reason I think it could change, and this is speculation on my part, is because of the availability of funds in IRAs that are subject to RMDs. So folks look at the required minimum distributions, the estimates for what those are spread over, probably beyond the end of their lifetime. And with that, you have the ability to take the income from the RMD and use part of that to buy a policy and part of it to use for additional income for that rainy day fund. So I think it could change. Again, that's speculation on my part.
No, that makes a lot of sense. So next question is, and I think this has to do with when you were talking about information about the IRA. Can you share a copy of that illustration that you did not have a slide for?
Sure. If anyone listening, or you or someone listening to the presentation wants to email me, I'll write that up so it's a little more legible than my scratching on the back of a piece of paper here.
Okay. And I was going to say, if you wanted to just send it to me and I can get it out to everyone.
Okay.
Okay. All right. So next question, Susan asks, if a client buys AssetGuard in one state, but moves in a few years to another state, does this plan continue or does it need to be adjusted by state?
It does not need to be adjusted. It continues. Once it's issued, the policy stays in force.
Okay, excellent. And Margie asks, is there any way to see some rates? So I know that you mentioned that there's a rate calculator in the portal. Is that correct?
There is. I've also got paper copies of rate schedules. I can send them to you if that would be helpful.
Absolutely, and I'll get it sent out.
Okay.
Okay. It looks like one other question. Do we need any additional licenses for any of the products, such as the trust?
No.
Okay. Short and to the point.
The trust is it's a simple one-page assignment of ownership. Actually, it's probably more than one page, but there's an assignment of ownership to the trust. NGL also has copies of the full trust document available. So if a client wants to read exactly what all the details are of the trust and has lots of time with the stay at home, stay safe rules, it's not much fun reading, but we can provide that too. If you Again, I can send you, Brian, copies of the assignment to trust documents, available for anybody who wants to look at them.
Excellent. And we just had one last question pop in here. It says, how would death from COVID-19 be viewed? I think you kind of addressed that already.
Yeah, it would, I mean, it's not listed on the application as a pre-existing condition. You know, probably as long as they're not hospitalized or been directed to hospitalization and they had it, I would think that NGL would have to pay. Now, may they adjust that? You know, things are changing daily. So, you know, I can't say definitively that it won't be adjusted, but right now there's nothing to contemplate COVID-19 on the application.
So, Bob, when someone does apply for one of these policies, what is checked in the background? Is it MIB, script checks? Um, can you kind of go into that a little bit, or are they fully underwritten in some cases?
No, the only underwriting is what's on the application, is what I showed you in that
That's
help.
it. Wow. So no MIB check, no script check or motor vehicle.
No, not at issue. Now, could that happen at claim time if it's on a standard policy? Absolutely. I mean, NGL does most of their underwriting at claim time during the first 2 years on a standard issue.
I
So
got you.
if they have some reason to suspect that there was something that wasn't disclosed on the application, that point in time, they may ask for MIBs and additional medical records.
Hmm. Okay. Okay. And then actually, we had a couple more questions that just popped in. So can we do a paper app over the phone and then get a voice signature?
NGL is working on that. They have it now for their pre-need applications, but not yet for AssetGuard. So I think that one's in the works. They also have an electronic online application that's in the works, but it's not going to be ready. The last I heard is probably later this year. AssetGuard would have an online application. Possibly sooner than that, the voice signature opportunity. But right now, they don't have it for AssetGuard.
So right now it's basically a paper app that we can fax in or upload.
Yes.
Okay, very good.
No,
Very
I have
good.
done some personally where I've via email, where I send the PDF of the app back and forth via email, and that works. I leave off anything like, you know, I can't do the bank account information and such, so I got to wait on mail on that. If they're doing an EFT, I leave off the Social Security number. I get that by phone and add it myself whenever I'm ready to upload the application. So there are some ways to do no contact applications with AssetGuard.
Okay. All right. Excellent. Well, Bob, thank you so much. I definitely do appreciate you going through this information with us. It's definitely valuable information for each of us to take on. So before we close, is there anything in closing that you want to say to the agents online with us?
No, I just want to apologize for my coughing and hacking and with my allergy problems. Got lots of pollen here for some reason. I guess it's that time of the year.
Oh yeah.
And I really want to thank everybody for joining us and wish you all well and hope everybody stays safe and well. You and your families. These are tough times and boy, hopefully we'll soon get past them.
Absolutely, absolutely. And we wish you and your family well also, Bob. You guys stay safe. And to everyone that has joined us, once again, we want to thank you for taking time out of your day. Hopefully you learned something new today that's going to help you in your business. Bob just went over a few things on how to continue to do business the right way. But if you're not currently contracted with NGL, if you go into your Sure LC profile, you can actually request the appointment there under appointment requests. If you're not contracted with Messer and you have questions about partnering with Messer Financial, feel free to contact our marketing department at 866-568-9649, extension 7819, or you can email them at mfgmarketing@messerfinancial.com. They'll be happy to answer any questions that you do have. Also, take a few minutes to check out our calendar, our events calendar at messerfinancial.com. We have webinar workshops scheduled throughout the year with valuable information, just like Bob did present to us. And just so you know, this actual presentation will be available in our Learning Center as early as tomorrow afternoon. So you can actually go back and listen to it again. Once again, thank you all so much for joining us. Each of you take care of yourselves and everyone around you. Have a great day.